Different types of stocks. Welcome to our informative session where we'll be diving into the diverse world of stocks. Stocks represent ownership in a company and can be a lucrative investment avenue. But did you know there are different types of stocks that investors can pick from? Firstly, we have common stocks. These are the most popular form of stocks that investors buy. As a common stockholder, you have the right to vote at shareholders' meetings and the right to receive dividends, which are a portion of the company's profits. On the other hand, preferred stocks are another type of stock. Preferred stockholders have a higher claim on dividends and assets. This means if a company goes bankrupt, preferred stockholders will be paid out before common stockholders. However, they typically don't have voting rights. Next up are growth stocks. These belong to companies that are expected to grow at an above-average rate compared to other companies in the market. They rarely pay dividends, as the companies usually opt to reinvest their earnings to accelerate growth. In contrast, we have income stocks. These are stocks from companies that pay out regular and high dividends. Income stocks are typically from well-established companies that have a steady stream of income. They're an attractive option for income-focused investors. Blue-chip stocks represent companies that are leaders in their industries, known for their stability, reliability, and ability to operate profitably in challenging economic conditions. They're a popular choice among conservative investors looking for steady growth and dividends. Value stocks are shares of companies that are considered undervalued compared to their intrinsic value. These stocks often have lower price-to-earnings ratios and may pay dividends. Value investors hunt for these stocks, hoping the market will eventually recognize the company's true value. Small cap, mid cap, and large cap stocks categorize companies based on their total capitalization. Small cap companies have a market cap of under $2 billion, mid cap companies fall between $2 billion and $10 billion, and large cap companies are those valued at over $10 billion. Lastly, we've got cyclical stocks, which are heavily influenced by macroeconomic changes. During a thriving economy, these stocks perform exceptionally well. However, during a downturn, they tend to perform poorly. These, my friends, are the different types of stocks available in the market. Each carries its own set of risks and rewards, and understanding them can help you make informed investment decisions. So, whether you're a risk taker or a conservative player, you'll find a type of stock that suits your investment style. Remember, the stock market can be unpredictable, and investing always involves a degree of risk. It's crucial to conduct thorough research and consider seeking advice from a financial advisor before diving into the world of stocks. Happy investing, folks!